Shares of Macy's and other retailers tumbling today after Macy's reported disappointing same-store sales, of course, during this all-important holiday shopping season, and then they cut their earnings outlook. Now, despite overwhelming evidence of a strong economy, including better-than-expected initial jobless claims this morning, retail news, it sort of begs the question, is this only about brick-and-mortar retailers, or are consumers running out of money? Joining me now to sort it all out, retail analyst Hitha Herzog. Hitha, nice seeing you.
Good to see you, too.
So what do we make of this news? Because we started out last night. Bed Bath & Beyond had a good, nice move. Of course, a low bar to carry. Target put out strong numbers. Stock was looking pretty good. Then it was a 1-2 punch, Kohl's and Macy's. And now all of a sudden people are wondering, what happened to the consumer? Nothing
happened to the consumer. The consumer is great. We saw strong sales over the holiday season. MasterCard came out with that number. Consumers, were buying. Sales were up 5.1% for the season. This is a good thing. They feel good about the economy. They feel good about their job situation. What's happening here is a story of the retailers. And then when we break it down even more, it's a story of two different retailers. So Target is broad-facing. They have a lot of product mix in there. They really have a very good digital strategy. Digital sales were up 25%. Each quarter, they have an increase on the digital sales, and this was no different. So you're looking at Target, but then you look at a store like Macy's that really missed when it came to apparel, cosmetics, really the focus on women's clothing and men's clothing.
So that was just mismanagement on Macy's part?
A complete mismanagement.
Miscalculation.
And if you think about it, they're the anchor stores of malls. So I think when people think of retail, and if a store like Macy's is failing, well, the entire sector must be failing. That's not the case anymore.
And still, Target was up initially. Then after all of these other, some of their would-be rivals started to miss, that stock is now down. Are they getting a bum rap? Because what I was reading, too, the digital sales part, huge spikes in people picking up, huge spikes in things being delivered. It feels like the omni-channel thing you've always talked about, that they're starting to perfect that.
Target really spent a lot of money on infrastructure, digital infrastructure, which is a lot of what these retailers should be doing, but they are not. Macy's has a good online strategy. However, when it comes to product mix, again, they miss the mark. So what is really happening now is that you're seeing retailers spend a ton of money on the SG&A costs. This is, again, digital infrastructure and stuff. When they don't have what ends up happening is the gross margins. When they can't up the gross margin.
Wall Street should understand that and be okay with it. I mean, again, this is not. Is that what's hurting Target, or is it just being beaten up because it's a retailer today?
Well, when you don't have positive gross margins and you're spending all that money in SG&A, there's a real problem. So people have to break down when they're looking at the retailers out there and thinking about what to invest. They really have to look at the numbers very specifically.
What names stand out to you on the retail side?
Well, we're talking about Target. I think overall, we're going to start seeing, and they haven't issued guidance for their earnings for 2018. However, I think Target and Walmart, because, again, they're broad-facing consumer stocks and retailers.
I'm really digging Target. I'm digging the customer service, the toys. I went there on Christmas Eve. I still hate the buggies, the carts, the shopping carts.
I got to tell you,
everyone else likes them.
They really love the baby products too. I got to tell you, I'm a shopper
some great
as well.
baby stuff. Yeah, you're right. All right, Hitha, great seeing you.